stocks struggled to rebound Tuesday between strong performance in technology stocks and a marked decline in energy shares as the major indexes tried to recoup 2% losses from the prior session. The S&P 500 turned negative Tuesday afternoon, falling 0.2% after rallying more than 1% earlier in the session. The Dow Jones Industrial Average added 40 points, led higher by gains in Boeing and Johnson & Johnson. Investor angst returned Tuesday amid a decline in energy stocks and fears the Federal Reserve is going too far with its rate-hiking plans. A comeback in technology stocks led the Nasdaq Composite to a 0.2% gain as Amazon, Apple and Netflix, which were hit hard on Monday, all traded higher. Facebook stock rallied 2.8%, while Google parent Alphabet added 2.2%. Beaten down chipmakers Nvidia and Advanced Micro Devices both rallied more than 3.5%, while the VanEck Vectors Semiconductor ETF climbed 2%. E-commerce giant Amazon, which sank nearly 4.5% on Monday, rallied 2.2% Tuesday. Aircraft and aerospace manufacturer Boeing jumped 4.6% after hiking its dividend by 20%. "We've certainly gone low enough that markets could find some stability here," said Bruce McCain, chief investment strategist at Key Private Bank. "I think it's anxiety about slowing economic growth and traders want assurance that someone's going to do something." Also helping sentiment was White House Press Secretary Sarah Sanders, who said that the Trump administration wants to avoid a partial government shutdown and has found alternative revenues to build President Donald Trump's border wall. The president has threatened to shut down parts of the government if Congress does not approve $5 billion in federal funding to build a barrier along the U.S.-Mexico border. But Sanders told Fox News Channel on Tuesday, "We have other ways that we can get to that $5 billion. At the end of the day, we don't want to shut down the government, we want to shut down the border," Sanders said. The deadline for an agreement is Friday. Fears an expected rate hike from the Fed this Wednesday will be too much for the stock market and economy to handle, sent the S&P 500 lower by 2% on Monday to 2,545.94 and as low as 2,530.52 on an intraday basis. Its previous low was in February. The Dow Jones Industrial Average plunged 507.53 points on Monday, or 2.1% to close at 23,592.98. The Dow and S&P 500, which are both in corrections, are on track for their worst December performance since the Great Depression in 1931, down more than 7% so far for the month. The S&P 500 is now in the red for 2018 by 4%. Clearly, it's a time of uncertainty both here and overseas, but given the strength of the economy, it's going to take some time until the economic backdrop supports a bear market, Key Private Bank's McCain added. "It's about managing your anxiety and waiting long enough to find out that, hopefully, the news isn't so bad." However, stock of energy companies fell across the board as oil prices sank 5% to a 15-month low on Tuesday. ExxonMobil fell 1.5%, Chevron lost 1.1%, and ConocoPhillips dropped 1.4% as the U.S. and Russia continue to pump at record levels ahead of planned output cuts by OPEC and its allies. The Fed is widely expected to hike its benchmark overnight lending rate for a fourth and final time of 2018 when it concludes a two-day policy meeting on Wednesday. While fears of rising interest rates have spooked markets throughout the year, such concerns have heightened over the past month as inflation and growth expectations recede. While market participants see the odds of a December rate hike above 70%, investors will likely scrutinize and react to the Fed's outlook for 2019. Rising interest rates can be a hurdle to smaller companies that carry a high proportion of debt, so any sign that the Fed plans to continue to raise rates each quarter could weigh on corporate sentiment. The interest on loans businesses pay increases as interest rates rise. Tweet President Trump took aim at the Fed again on Tuesday, urging central bank members to not let the market become any more liquid than it already is. "Feel the market," Trump encouraged, "Don't just go by meaningless numbers. Good luck." Trump's tweet Tuesday follows his criticism of the Fed on Monday, when he said it is incredible that the central bank is even considering yet another interest rate hike amid the outside world blowing up around us. Trump has openly criticized the Fed as well as Fed Chairman Jerome Powell several times in 2018. CNBC's Michael Sheets and Houston's Huang contributed to this report.